Good morning, folks. This is Naim. I'm Chief Market Analyst at Evertrade, and welcome to our daily technical analysis video. Folks, today is Friday, so happy Friday to you, first of all. So, let's have a look at sterling and Brexit. Remember, this is something that we looked at during this week as well. We talked about the strength in sterling and then how the price was really in battle with important price levels. So now we are going to have a look at the price for sterling and then see how the price performed really against our previous predictions and what is really next in terms of sterling's price. So before we begin, as always, it is important for us to go through this slide of disclaimers and risk warnings. So anything which will be discussed in this video cannot be perceived as an advice. If one is seeking for one, please do consider consulting with your own financial advisors. Now, as always, I'm going to bring out the MT4 platform, which I'm sure all of you guys already know. So let's have a look at the sterling dollar chart. Now, to begin with, we will have a look at the weekly time frame first, because today is Friday, so it is important for us to have a look at the weekly time frame analysis, see what exactly is going on with respect to the weekly time frame. So right over here, this particular line, this is your 200-week moving average. This one over here, this is your 50-week moving average, and this one over here is your 100-week moving average. Now, of course, in order to put those ones, you can just go into insert and then follow our previous videos, and then you go to trend and analysis. I'll show that in a bit again. But what we see right now is the price is really in battle with its 200-week moving average, meaning there are chances that if the price is unable to stay above the 200-week moving average, the path of least resistance under those circumstances could be skewed to the downside. So that is the first thing which kind of really stands out from this particular time frame perspective. Another important thing which also sort of stands out from this time frame is that we do have one downward trend line which is very much influencing this particular price action. Now, in order to draw a trend line, all what you have to do is join the lower lows. So this is your highest high, and then this is your lower high. Of course, we had this one, we can certainly draw this trend line, but this trend line obviously was violated when the price started to move higher from this particular point. When the price violated it, it was at this particular point action that we had to draw another price level, another trend line. So from here we have two rays of trend line moving to the downside. The first one is violated because the price broke above that one, so we can certainly erase the lower one. So now, where do we go from here? What does it really mean in terms of a price action? That is the most important question, right? So in order to do that, we go into a daily time frame. But before we start digging into the price levels and the trading opportunity, once again, it is important for me to mention that the price on the daily time frame is again very much in battle with its 50-day and 100-day smooth moving averages. And as long as the price stays above the 100-day moving average, our trend is very much likely to remain to the downside. Yes, you guys may be confused now that you look, Naim, you said on a weekly time frame the price is trading very much in the downward trend because that is the dominant trend. Yes, it is the dominant trend, but that is on the weekly time frame. But the moment that we turn into a daily time frame, we can see a pattern of a lower high is forming. So meaning the price is trying to break to the upside, the price is trying to make a new pattern, and the validation of this pattern will come if the price breaks above this particular zone, meaning it stays above the 100 and it moves above the 50-day moving average. Now remember, last time when we were talking, or when we did this video, at the time the price was in battle with its 50-day moving average right over here, and at the time the price crossed above its 50-day moving average. So that gave us this indication that the next trend for the price is very much likely to be to the upside, because when the price broke from here to the upside, we were thinking that the price is going to go into this resistance level, but that is not what we have seen. The price quickly reversed its direction and now it is moving to the downside. So the area of trade, the area of resistance in terms of a price level remains right over here. This is the most important price level that we are really looking at. Now, as long as this area of support, which I've mentioned just in front of you guys, as long as this area remains intact, we will be okay. The price is more likely to move to the upside as long as support 1 remains intact. But if the support 1 doesn't, if the price violates this support 1, then the next possible move from here is going to be right around this price level. It is going to be right over here in this area. So let me draw that area once again for you guys so that you know that where is that price level that I'm really referring to. So that another support 2 area is going to be in around this one, just above the 200-day price level. So these are the 2 support areas that we are really looking at with respect to the price level. So this is your support 1, and then this is your support 2, just like how I've mentioned them on the chart. Now, in terms of resistance, if the price does come out of this particular zone, your resistance is going to be, sorry, let me just delete that. Your resistance is going to be, or your take profit is going to be right over here. This is the price level that we'll be very much looking at. So it's just right over here. This is your price level. So once again, let's draw those support zones. So this is your support 1, this is your support 2, this is your resistance 1, followed by your resistance 2 area, which is going to be here, and the third resistance area will be at 134. So the all in all, the focus right now for the price remains, to summarize again, is between 100 and 50-day moving average. If price bounces back from to the upside, then this is your resistance area, right? So in terms of your risk to reward ratio, this is your risk number 1, and then your reward is gonna be 2 to 1. So you are still okay. And then you will only take half of your position over here, and then you will let the rest of the position to continue to the upside. And when that position will continue, so this is going to be your second half. So if you enter in around this area, your risk to reward is already 2 to 1, or at least 1.8, and then you go into the other side. But if the price breaks that area, it comes into this area, then this is your first, what you call your risk. Again, your risk to reward under those circumstances, because you won't be looking anything less than that, will remain at this area. So these are the price levels. These are the areas that we are very much focused on in terms of sterling and let's see how the price will pan out next week. But it is more likely, to summarize again, for the price to move lower. And in terms of the RSI, what we are really looking at in terms of the RSI is for the RSI to remain above its upward trend line. But if it breaks below this upward trend line, if it starts to move lower from here, like the RSI moves here, then it really means that this is the area, or this is the next area that we are really focused on. All right, folks, that's all for today, and see you guys next week. Thank you.